Hey guys, it's Kieran. In this video, I'm really going to expose certain misconceptions about consistency and why this whole space has got consistency in trading really twisted, I think. And so first of all, that dreaded question that everybody has. Can I make $1,000 a day in trading? Well, yes and no. So if you aim to make $1,000 a day in trading, that roughly means that you hope to make $5,000 in a week, because naturally there's 5 trading days in traditional markets. Of course, you've got markets that are 7 days a week, but realistically, you're not going to have good days all days of the week. For example, usually you have 2 to 3 good days. You might have 1 break-even day, and you might have 1 bad day. So that means that overall, as a net result of this, you only have 2 really good days. And so, in a sense, if you're hoping to make $1,000 a day, and if this is the reality in an average week, then that means you're only going to really make $2,000 at the end of the week. But so realistically, what it means is that if you want to make $1,000 a day, that in a sense means that you want to make $5,000 in a week. And so you need to take $5,000 and divide that by 2 to get $2,500. And so in a sense, you would need to make $2,500, hopefully, in those 2 good days, and that will get you 5,000, and perhaps the other days would just break even and sort of be at a break-even stage. And so overall, as a net, you would get $5,000 at the end of the week. And so my overall point is that aiming to make $1,000 or a set amount every day is pretty dumb, I think. It pretty much restricts you and makes you more narrow-minded. It makes you less focused on the actual process in trading and more focused on the actual outcome. And so I always tend to see each trade as a statistic as opposed to being too attached to one trade. And I'm more really bothered about my performance at the end of the month, because you cannot really take every single day and get too obsessed about it. You have to understand that there's a natural learning curve. And of course, naturally, you want to really take a huge sample size for your equity curve and your trades to really play out and really see if your edge works out in the long run. And so the next thing is that consistency. People think consistency just means a high win rate. Well, a high win rate helps, right? But doesn't necessarily mean that you're going to be profitable and consistent, because you could have an 80% or 90% win rate. But the question is, how much are you making every time you win, and how much are you losing every time you lose? So for example, if your risk-reward ratio is a 3-to-1, so you're making 3 times the amount as you win compared to the amount you lose, that means your win rate is fine being around 25-30%. You're still going to be consistently profitable across a long period of time. Yes, granted, you might not get profit every single week or every single day, but in the long run, hopefully at the end of the month, your statistics and your edge will eventually catch up, assuming you have got other good risk management as well. And so, yes, you can have a high win rate, okay? You can have a 90% win rate if you aim for like a 1-to-1 risk-reward ratio trade. And so the overall misconception that I really want to address is that you cannot consistently expect to make a set amount of money every day, but the goal should be to make a consistent performance at the end of the month, having a consistent performance in the long period of time across the end of the month. And so your edge, in a sense, is consistent. So the goal is having a consistent edge that works across the long run, and that stands the test of time in different market conditions, whether it's trending or a sideways market. So the next thing is, some people think consistency. What does consistency mean? And in the traditional sense, you might think that consistency might be a scalper, right? Consistency obviously means different things to different people, right? So in a scalper, for example, this is the equity curve of a scalper. Scalper, generally speaking, is very, very consistent. It's very modest gains and modest losses. And overall, you just have this median and you kind of bounce along. It's slow and steadily. And eventually you reach the end target. An event-based trader is pretty much swings up and down and really much dependent if you have big news events. And so this right side is the equity curve of a swing trader. And you have to appreciate that there's different ways to skin the cat. There's different ways to get to the same end result. You just might have a different route. So a swing trader, as the name suggests, has lots of different swings, because very often you're holding trades for a longer period of time. You have to be prepared to be in drawdown. You might be prepared to take a loss, but then eventually you have to wait a week for another trade, and then eventually that trade will be a big winner. And so you're pretty much having huge swings like this. But in the end, a good trader has made it, regardless if they're a scalper or if they're a swing trader. Yes, the scalper might have like a lot more trades, and they might have more gains, but it might be more modest gains, and the swing trader might have more exponential gains, but doing less. But if you're want consistency in that traditional sense of consistently producing small gains every single day, every single month, then perhaps scalping is for you, really, right? If you really want to have see an outcome every single day, and you just want to see progress being done every single day, then in the traditional sense, you might decide to be a scalper because you're making modest gains up and down, and you're eventually getting your end result. And swing trader, you should be prepared for drawdown, really. And of course, scalping is of course considered the foundation of trading, because specifically when you're trading, before you get really consistent, scalping really enables you to have enough market exposure. You're able to really see the flow of the market in real time. And there's different ways, of course. You can scalp order flow. You can, of course, scalping works hand in hand with swing trading, right? Because you're able to be more precise in swing trading if you are able to master scalping. And conversely, if you are good at swing trading, then you understand how certain scalps, a certain portion of it, you might want to keep for a longer period of time. There's different ways you can go about this. And the last thing is, of course, in this short video is don't confuse a good win rate with consistency. Of course, these things work hand in hand. But assuming you've got a 60% win rate, so you win 6 out of 10 trades, and your risk-reward ratio is a 2-to-1. So every time you win, you make 2 times the amount as you lose. So that means that across 10 trades, if you win 6 times 2 is 12. So you would make 12% overall. And the losing trades, so 4 out of 10 you lose. So 4 times 1 is 4. 12 minus 4 is 8%. Okay, that's a good result, right? You would take that, right? But the problem is that it doesn't mean you're going to win the first 6 trades and then lose the next 4. It can come in different ways. You can lose the first 4 trades and then you might win the next 6 trades. And so in that traditional sense, you might not be consistent, but at the end of the month, you might be consistent if you're able to consistently pull that edge consistently month after month over the long run. And so you have to appreciate that there has to be some flexibility in this process depending really on your trading style. And in summary, having that fixed mindset of having to make constant gains every single day is pretty much going to be detrimental to your performance. It's going to really affect your growth as well. But having a more bigger outlook in which, look, I'm trading this and trading is a business. I'm more concerned about my performance at the end of the month. And me being consistent is not so much me having to have a positive result every single day. It's me knowing that my edge is consistent over the long run, and it's consistently producing results at the end of the month and making bank every single month back to back. Well, thanks a lot, guys, for watching. Do check out my YouTube channel. This is where I post my passion for crypto and really tips and tricks to really fast stack your trading career. Well, thanks a lot, guys, for watching, and I'll catch you in a bit.